Hey, what's going on, everybody? We are live, and I have my good friend Madeline on. Madeline, how are you?
Doing good, doing good. Love your new setup.
Thank
And
you.
the flag is very on brand for the week.
Oh, absolutely. It's on brand all the time.
For sure.
Um, so we are going to talk a little bit about SBA loans because it's one of those things that I feel like a lot of people get confused going through the process. There's a lot of misinformation out there, and it's something that so many people get wrong that I think we need to talk about it. So let's go into what SBA loans are used for, first off, right? Because this is the biggest thing. People always think, right, Madeline, that if they get the money, that's all they need.
Right.
Well, the program has to match what you're trying to accomplish, right? So an SBA loan is great for when you're trying to buy a business. It's great for when you're trying to buy a business property. It's great for consolidating debt. And it's great to add some like a major cash flow injection. So those are really the four times that you would use an SBA loan. And they're all a little different. Like if it involves property, you're either going to do a 504 or a 7A, right? But if it doesn't involve property, you can only do a 7A. There's a lot of different nuances with the SBA, and most of the information that they have out is completely wrong. So, Madeline, what are some of the questions that your people ask all the time about, an SBA loan?
Yeah, I think for a lot of our clients, they weren't really getting involved with the SBA for financing until COVID, and then they were getting EIDL loans or grants. Could you kind of, I guess, paint the picture of how maybe those loan programs are a little bit different
Yes.
and why SBA isn't necessarily the route that you have to go when you're in a pinch?
Yes, definitely not usually the route to go when you're in a pinch.
Right.
A lot of reasons for that. But so when COVID happened, guys, the SBA started funding they had the PPP, the Paycheck Protection Program, and they had the EIDL, Economic Injury and Disaster Relief Loan. Those were nationwide disaster programs to help support small businesses and to keep people paid when they illegally shut down the country. And that's not your typical SBA process. It's not your typical SBA loan, and it's certainly not the typical SBA rate, right? And so people are now confused because they're trying to get additional SBA loans, and they think it's going to be just like the EIDL, and it's not. Traditional SBA loans go off of one, they have much more strict requirements. So you need at least a 680 credit score. And two, they go off profit margins, right? The majority of SBA loans, there's one that doesn't, but the majority of SBA loans are going to go off of your net profit to see how much of a payment you can actually afford. And so those are some of the differences that people are kind of realizing and waking up to now is that, hey, SBA was great back in COVID when we had the pandemic. It's not so good now. What's the difference? Well, the difference is the SBA is all they do is guarantee the loan. The bank is actually writing that loan, and the bank has to approve you based on their own guidelines and SBA guidelines.
Awesome. A couple of misconceptions, or maybe they're not misconceptions, and you can clear this up for us, is if I get an SBA loan and it's backed by the government, I'm now tied and bound and I'm limited in my business. Could you talk about some of the limitations, if that could affect the sale of your company or any other ramifications that you should be considering when going the SBA route?
Wow, that was a really good one. That was a really good one.
Shots fired.
Okay. Yeah, you were locked and loaded today. Okay, so covenants. You're not tied to the government. Okay. Here's the reality. A lot of people were concerned during COVID, and rightfully so, because a lot of the things that were going on during COVID and around those programs were fraudulent, right? A lot of people popped up, started doing this, and literally they just defrauded the government. But today, your normal SBA loan, they are not really digging too deep into unless there's a default. Okay. If you default on an SBA loan, then it depends on what was their collateral attached. So typically, If the loan is 350 or less, yes, there's a personal guarantee, but there's usually not a collateral requirement. If it's 350,000 or more and you default, they are going to go after the collateral. That's just some of the differences.
Okay, so if I have a business vehicle or heavy machinery and equipment, that likely that loan is collateralized against those assets.
They would let you know either at when you get a term sheet or when you sign the agreement. One of those two stages. They'll tell you, hey, this is all the collateral we're going to use to secure this loan. And basically, as long as you make all the payments, there's no issue. They're not going to check on that. The other thing that a lot of people don't understand about the SBA is not a great place to get large sums of cash. Okay. Typically anything above 400,000, they want to see where every dollar is going towards. So if you're buying a business, right, you know, the purchase price is $2 million and then they may need 400,000 in working capital. That the SBA would do, right? But to do an SBA loan and get $2 million in cash, the SBA really isn't going to write that. Right. So anything above 400, you actually have to show the breakdown and the use of funds. And a lot of times the SBA will want to pay for it directly, whether it's for the building or if it's for equipment or you're purchasing a business, they are going to send the funds to who you're buying it from directly.
So if you're looking to purchase a business and let's say of that 2 million, 1.2 is going just to the prior owner, whoever that's fine, even though it's
Yes.
cash exchange. Okay, excellent.
Yep.
Good deal. That was a lot in 7 minutes.
Yeah. Well, we're not done. What else we got? Because
Okay.
here's one of the most popular programs we have, and you know this. The SBA has a beta program out, which is awesome. Only 2 or 3 banks are doing it. And basically what they're doing is if you have 700 credit, 2 business tax returns, and good business credit, they will allow you to get 30% of your top line revenue from the prior year's tax returns up to 150,000 in a couple weeks, right? So they're going to get a 10-year loan at prime plus 375 or prime plus 4. It actually is around 11, 12%. And you don't have to be profitable as long as you did at least 500,000 in total sales the year prior. You should qualify for the 150. So that's a new program that's out. That's pretty easy to qualify for, that a lot of people are taking advantage of because they want to have cash reserves in this type of market, in this type of economy, which I can't blame them. Like this is the time to have boatloads of cash just sitting.
So, yeah, agreed. Just really quick, a topic kind of going back to the collateralization. We've had a couple of clients who have either been a part of mergers and acquisitions, sold books of businesses. And what I did want to say, just from my side of the house, as someone who's collecting a lot of the documents during acquisitions and doing due diligence, it's actually relatively easy to get your assets uncollateralized if you send in a nice little paper form requesting it. So that has been interesting to see, as long as the company is profitable without that portion of the book of business, or if you're able to make some type of a compelling argument, or if you've been compliant with the SBA's payments for a couple of years, that has been a pretty easy process. I mean, as easy
Do
as
you know
what
why?
the government is.
Do you know why that works?
Assuming they just want to get paid, but go ahead.
No, really. Like you actually gave the key to it, and you don't know you did it. So the SBA, as that balance is coming down and as you're making those payments, you obviously owe less and less and less. So as the balance is coming down, they can release some of that collateral.
Mm-hmm.
That's exactly it. And that's a very wise decision. If a operator is cognizant of where his balance is, it's a very good idea to get all the collateral you can get to be released. And here's why. That collateral that you have now that is unencumbered could be an asset to borrow against. So one of the programs that we've been taking advantage of a lot recently is when people have paid off equipment and they're in a bind. If you have paid off equipment and it's valuable and you're in a bind, you could typically get a loan for 2 to 3 years using that as collateral, and you'll wind up getting much cheaper and better terms. So that is another reason why it's so important to do what you just said.
That's a gold nugget right there.
Options matter. Oh yeah, we've been doing it. I've had so many people that have cash flow issues from taking 2, 3, 4 advances. And so if they do have the equipment and they do have the collateral, we can actually get them out of like a predatory advance or advances by using the equipment to secure the loan.
Good stuff.
Yep. That's the difference between pros and these guys that pretend, though. You know what I mean? You need the options. Options matter, guys, a lot.
Yeah, absolutely.
And also who you guys work with. I cannot stress this enough. Like, if it's an accountant that you see me interact with, okay, Tyler, Madeline, anyone like that, I know that they actually handle their shit. Okay. And that's important. It's just as important to have the right accountant as the person that is actually going to be helping you get the financing. And the reason that is if they're not preparing things correctly, if they're not preparing things quickly enough, it will jeopardize you, getting the right type of financing. So 100% be careful of who you use for financing. But if you guys don't pick the right accountant, that can set you back just as quickly.
Yeah.
Yeah. Like I'll give you a fucked up example, and I'm not going to say the name. I know someone that I am working on a $20 million loan for right now, and the prior person that they were working with basically dropped the ball entirely because they sent the wrong form from the accountant. The bank already saw it. It wasn't accurate, and they declined it. So imagine missing out on $20 million because your accountant sent the wrong fucking form.
That's painful.
Yeah. 20 million reasons to fire that person.
Oh my gosh. What's on the docket next week, Jonathan?
We are going to talk about a program that no one knows about. It's not talked about. Most banks don't carry it. We're going to talk about AR financing and invoice factoring. It's probably one of the best programs out there. So make sure you tune in, and definitely tune in if you're business to business or you work for the government.
Yeah, I'm really looking forward to that one. Especially, I just spoke at a conference last week where we were talking about how to safeguard your cash during economic downturns. Huge buzzword, huge topic of conversation. This is going to really play into that topic. So looking forward to next week.
Me too. I look forward to every week with you. These are great.
Me too.
Love talking shop. Thank you, Madeline. Appreciate you. And we'll crush it next week for you guys. Take care, everybody.